Welcome, affiliate listeners, to a very special episode because normally I'd be joined by a guest or Thomas or somebody else, but today you get the rare pleasure that my wife is constantly trying to avoid, which is a monologue from Kyle. So today I want to share with you guys, I just think some insights and share you some things that have been bumbling around in my brain that I feel eke out sometimes at conferences and with clients, but I want to share it in a broad sense because I think it's really, really important. And that's where just for you guys to know, one of my big, I don't know if it's a hobby or just maybe something I should probably find to stop doing as much, but is I like to really obsess over oftentimes the economy, big market movements, and really evaluate things in terms of what does that mean for business owners and our marketers, not only in terms of what you should be doing in your business, and we'll talk a little bit about that, but also how that might reflect and how you address your marketing and campaigns and really look at consumers. Now, it doesn't mean that you don't have to address your consumers or you don't do the same in an addressable market, but the language might start to change or the way you construct your offers might start to change when we evaluate what's going on. And when I say the economy, one of the reasons I want to talk about this, I know you can't show your hands right now, but who by a show of hands is like confused about the economy every single day? Nah? Anyone? Well, you're not alone, right? Like, it's really confusing right now. In fact, like I love following economists, researching and listening to economists. I really felt like I wanted to be an economist when I was in college until I realized I would make no money. So I decided not to do that. But it's a really challenging time. And economists, like people have been doing this forever, we're in an economy that no one has seen before. You're in literally a time that we can't pull back in history and even find parallels to. You might try and Frankenstein something, but just so you know, markets don't tend to do well when you Frankenstein theories together to hope to explain what's happening. So where that's a fact that we have GDP that's going up, yet 60% of Americans feel like we're in a recession. Also, it's one of the first times we've seen what would be growth and large growth and growth that has been sustained in terms of what you define the GDP. But at the same time, we see job growth shrinking. We don't see job growth. Where I know January had good numbers, but overall employment is way, way down. People are, listen, just go look on LinkedIn. You see more green banners and people that have been unemployed for months and months and months. And whether it's AI, whether it's the bloat of companies that maybe hire too much, it all spells something that's very, very peculiar. Even if you talk about inflation, the numbers, hey, it's not as high as it was. But, well, actually, it depends on how you're looking at inflation. Because you know what's huge and massive right now? It's your cost of goods, right? The stuff you buy every single day is still at 9% inflation month over month. It's getting more and more expensive. And here's what's even more interesting. It actually depends on what market you're in and where you're at to where you see that. And these are things that are creating some just atypical behavior in markets. We've never seen this before. And things I pay attention to too in terms of the stock market. The stock market is, I think, I remember apolitical here. Pam Bondi has all let us know where the stock market might be at at 50,000. That's where we're at, right? We know the Dow's doing really good. We know things are doing really good. But we have to remember, too, the stock market is paper good, right? Is this real? And if there's so many people that are taking advantage, why does 60% of America feel like we're in a recession? And we also look at GDP. If you even look at consumer expenditures, do you know that you might not know right now, 20% of the United States, the 20% top earners, are making up the bulk of all consumer expenditures. That's very, very peculiar. We've never seen something like that to have such a disparity. I was even trying to go back and look at during the Black Plague, right? For those that didn't know what was going on during the bubonic plague in England way back when, wealthy people just went to their summer houses, and some of them didn't even know what was happening, right? So that's the closest I could even find where you see there is an economy that's completely different, whether you call it a K, an E, or whatever letter you'd like to use. We see that there's a very small portion of individuals that are supporting the economy in lots of different ways. So on top of that, I think one of the things to look at is, we hear a lot about inflation. We hear a lot of things of what's happening here. So I want to break down a little bit. We're going to talk a little about some of the inflationary things. We're going to talk a little about my thoughts on some of the consumer trends and what that can mean for buying and where you'd want to focus or adjust your marketing depending on who you're focused on. And also what some of this could be for how you manage your business and particularly think about your cash flow and where you're putting your dollars. So first, let's talk a little bit about inflation. I know that's been a term that a lot of people never thought about, but I don't think I go a day anymore without seeing somebody talk about inflation, whether it's good, bad, indifferent, doesn't matter. It's coming up all the time. And we are not talking about helium in balloons. It is the inflation of what's happening to our dollar, right? Is the value going up or is it going down? And we continue to see that it looks to be devalued. Now, a lot of things to pay attention here. I think one of the reasons why it's so difficult to figure out what's going on is partisanship in terms of two sides of a political system that want people to believe one thing or the other, right? And they tend to be polar opposites. And the truth always tends to lie in the middle in some way. But let's talk about some real things that are important to know. The big, beautiful bill. What does this really mean? This is an apolitical statement here. Again, guys, this is just what it's actually doing. It intends and has flooded the market, particularly at the upper reaches, say top 20% of earners, with a lot more cash through a lot of progressive tax credits and changes and carryover that happened through the plan, whether it's reversing a lot of other deductions from the prior administration or taxes from that administration that were retroactive. It's really created a large influx of cash. And where we thought there were going to be stimulus checks, now there's not stimulus checks, now there are very large deductions that are going to be on your taxes. If you look at the incentives of, hey, how do you create a boost in the economy? And I would just tell you, things that people care about is if we just flood cash into it, we tend to see consumerism increase, right? And we need to expand that 20% pool to a lot more so we could take 60% of the people to feel like the economy is good. A lot of this, I would say, is, you could say that it's a justification for, tariffs. Again, I will fully say I don't think of this as political. This is just my economic belief. I'm not a fan of tariffs. But you do know that that's creating some sort of increase in consumer goods. So offsetting that through flooding cash in the system could feel good. But what's the problem when, say, you flood cash into a system and also lower interest rates? We kind of already saw what happened when a bunch of cash entered into a system with low interest rates during the pandemic. And what did we experience? A lot of that really ugly I word, inflation, right? Now it trails, it doesn't happen right away. So if I'm maybe targeting midterms and I want to create a really good swell of positivity, I might defer maybe a lot of debt and influx a system with a bunch of cash. So people are happy. We're kind of like just feeding more dopamine. We buy that thing that we were worried about. Maybe we pay off that consumer debt. We'd like to, because guys, consumer debt continues to accelerate at an all-time high. And I had showed some stuff in the past, but if you actually look at the charts for it, where some of that is tied to inflation, right? If people spend a lot more money or everything's more expensive, of course, debt's going to go up at the same ratios you would have previously had. So sometimes these all-time highs are a little bit more vanity metrics, because if everything's more expensive than it always has, well, debt's also going to be more expensive than it always has. But when you look at the steep curve, that's what you should pay attention to, because it's accelerating beyond the rate of inflation in terms of consumer debt. And when everything is getting more expensive and you're not necessarily seeing job growth or wage growth happen, a lot of people are floating through those credit cards, because at the end of the day, one thing we know about Americans is we really don't like to stop spending. Like, how many people do you know that are just really like happy with just spending less? No one, right? They need to get that thing off Temu. They need to make sure that they buy that subscription service. They have to make sure they're going to the newest restaurant, and they're going to post about it because their friends are going to know. And if they know, they have social value because they're posting and sharing it everywhere. We also live in a very bifurcated world where no one actually talks and connects with each other, but they sure as hell talk through social means to share some sort of false representation of what life is, right? Like, that's just real. It's essentially what we use to make money off of, guys. This exists. But through that, we're seeing an acceleration of a lot of this consumer debt. And that creates a massive problem when layoffs start occurring. There's not new jobs to happen, and we're going to see some depression in that side of those markets. So just as we talk about it, I think that's really real. And then one of the other things, so let's give those people cash so they're happy and they could keep on spending. And I would say the fear of that climbing debt doesn't become apparent. So there's incentives for that, but that creates a lot of hazards. The other thing that you have to really worry about from an incentive standpoint is in terms of debt. So I don't know if people realize that we have, in 2026, there's a amount coming due of $1 trillion and a loan that the government took out about 2 years ago that's coming due. And that was done at a 0% interest rate. So interest rates are really low right now, right? No. So imagine doing something at zero, lending at zero, and having to pay back that loan now to get new cash for it at a 4 to 5% interest rate. That's going to be, again, now almost trillions of dollars and billions of dollars that all of a sudden are new debt that are nothing but interest that the U.S. government has to go through. What is that again going to do? How you solve for that? We'll just print more money. And if there's more money, that means more inflation. So why this is significant and why it's really important is it really starts to dictate where you're going to see investments, where people are going to purchase, and buying trends of different segments of individuals. So the one I want to focus on first, and this will actually tie into what I look at for what you should do for your own business. This is not financial advice. This is just me looking, reading, thinking about things and what I would do in these situations. If I was you, at least be thinking about doing. Go talk to a professional, verify this stuff, do it all your own. Do not take any financial advice from me. This is just things that I'm paying attention to. But when we look at this right now, I said 20% is going towards all consumer expenditure, and the bulk of consumer expenditures coming from the top 20% earners. What's also really interesting is to look at what happened previously with wealthy groups when we flooded the markets with cash. Where did they put those dollars? Well, they tend to be in a lot of areas that aren't affected by inflation, or if they are, they're positively affected, whether that's the stock market, which we're going to put a pin on that and talk about that a little bit later, or things like gold, crypto, silver, property. These are all things that assets that even as inflation goes up, if you bought it at a lower price point, because they're fixed and their value isn't really tied to monetary policy, if inflation goes up, you're actually better off for it in those situations. So one of the things that stands out to me, institutional investors about 3 to 4 months ago were pouring money and buying gold in the largest tranches that we have seen for a long, long time. Why would they be doing that? I think it indicates a real lack of faith in USD, in cash, in the future of USD strength, whether it's through inflation, whether it's through currency dominance, whether that's you're paying attention to, say, what China did in terms of their bond market, where you saw worst yield bonds sell out above government bonds in record time. And you'd think, why would that happen? Well, I won't go through that whole detail of what might be happening there. But all of these are signs that tell you that the wealthiest people in the world, that if you're if you're deep state, whatever, and you have a lot of aluminum foil in your hat, you say they control the world. Regardless, they're people that have a lot of money and they are very, very intelligent, probably know information that we don't. They're spending in droves and large percentage in assets that aren't impacted by monetary policy. That should be something you pay attention to, particularly when you're thinking about your business. If you're running your business on a lot of debt right now that is predicated on the value of what USD is, right? Or if you have a lot of your investments tied up in things that are going to be dependent on the value of USD, or if you're just sitting on a lot of cash, I would tell you that puts you at very, very high risk based on what we're seeing in the signals, that a year from now, you're going to be a lot poorer even if you don't do anything. If you just sit on that and wait, most likely you're going to be in a very bad position. So when you're thinking about what that could mean for your business, is asking yourself, if you're reinvesting any of your cash, reinvest it in assets that aren't going to be affected by monetary policy, right? And changes in the value of USD. In fact, do ones that are benefited by inflation if you bought earlier. Those would be things that I'd really be looking at. That could be resources in your business, right? If those are, whether it's new technology, whether it's buying another company, right? For the valuation that might be here, but even tomorrow that valuation goes up purely based on inflation. These are actually really ideal times to be buying and taking advantage of these things when people are worried. Again, 60% of people think that we're in a recession. There's probably a business owner out there right now that thinks his business isn't going to survive. These are the types of things that you might be able to purchase, get at a discount that's going to be made even better with inflation and mass inflation a year from now. So these are the assets that I would really be paying attention to. Let's talk about crypto. I think crypto, a lot of people, listen, I've had many of the Thanksgiving, Christmas dinner laugh outs where people are like, oh, you're into crypto, or talking about NFTs. They're like, you want to buy some monkey coin or whatever it might be. I'm not talking about that. We're not talking about just speculative markets. We're talking about real assets that are going to continue to grow, that are agnostic of monetary policy, right? They don't matter, in fact, are strengthened if USD goes down in value, right? So one of the reasons why this is, and let's focus on Bitcoin and Ethereum are really good ones to pay attention to. There's utility here. And also, Bitcoin at this point has been very well established as probably the flagship currency in the crypto world. You don't necessarily have, where it might be unstable at times, true, but in a long run, it's going to continue to increase in value. One of the main reasons why is just the concept that if you're a lot of people that might not be familiar with crypto, you have to remember when crypto is created, there's a finite amount. It cannot be, you can't make more of it. And if it gets lost, it just gets lost forever. It's never going to get more Bitcoin, whatever coin you're investing in, there's not more of it. So a way to think about that and why that's valuable is another way that exists is think of fine art or precious metals. These are finite resources. So by having them, they're pretty much valuable all the time. And in fact, you can almost guaranteed in a long run, you're always going to increase your investment by having these assets because they're stable, they're finite, and we've already shown over thousands and thousands of years, these things are valuable. And that's why in times of uncertainty, particularly monetary uncertainty, you don't want to be stuck holding Venezuela dollars. You want to have assets that are going to be transferable regardless of currency. You could go get it in euros. You could go get it in whatever you want. It's going to be the same everywhere. And I mentioned fine art, watches. I know this sounds crazy, guys, but if you wanted to get into buying watches right now, if you had a way to invest some of your dollars as they come through, this would be the time to do it. Yes, I'm telling marketers, buy more watches. And again, why is that valuable? I had a really, really smart guy tell me this, Kevin Nations. One of the biggest values of having a watch is, guess what? If I need to go get cash in a different country out of USD or whatever that might be, it's portable, it's easy to hold, and that market is global. I could take a watch that's worth $200,000 and quickly move that for around that exact same face value in any currency in the world that I want. Why is fine art so valuable? It's universally valuable, and it will continue to be valuable and maintain its value regardless of what your government does, regardless of what happens to you in your business in terms of currency fluctuations and changes, making it one of the most stable assets that you could own. So this is the time to flash your watches, maybe not lease your Ferrari, but put it towards something that is going to really be valuable for you and potentially for your business and those types of assets. Crypto is the same way. These are finite ones, but look at utility. Ethereum and Bitcoin would be the ones that I would say would be the most stable from my perspective. But again, talk to some professionals. Don't chase the dragon on fast gains. Look for stable resources and investments that you could put your money into that during an inflationary time frame, you're going to be better off with it. When the smartest people in the world are doing that, we should pay attention. And most importantly, listen, think about it. If you're wrong and if I'm wrong and everything's right and we don't go through hyperinflation, are you worse off? No. But if in the event that something does go wrong, just like I used to sell life insurance, and I said one of the big things I always tell people is like life insurance, one of the tricks of it is you don't really ever want it. It's not useful for you if things are going well. But in the moment that you need to have insurance, you'll never be able to get it. We're preventing and investing in the hopes that we don't ever have to use it. But boy, if it's there, we're so glad that it is. And it's not too different in the way that you might start looking what assets you want to purchase and things you want to focus on, going to what feels like could be a very unstable time in terms of, I would just talk about currency value, right? We're not even talking about market conditions. We're not talking about recessions. We're not talking about people and jobs and all that stuff, just merely in terms of what could be happening based on monetary policy in our country. And again, you might disagree with me, and that's fair. People disagree all the time, but I would tell you, even if you disagree, it's good to plan for the downside of being wrong, right? Because I would tell you what, if I'm wrong, I'm not in a worse position. So that's what I really like to focus on. Now, let's kind of talk about what this might, so that's what I really focus on with your business individually. But what does this mean for markets? What does this mean for me and my business? Well, I'll tell you what it means is how you could shift and change who you're targeting and who you're talking to. Who's your target demographic? Who are the people that you are communicating with and your product is selling to? Do you know this information? Do you know their age range? Do you know their income bracket? Are we creating products for consumers that right now think the economy is great and they're spending like crazy and we could see it? We know that if you're targeting the top 20% of this economy, you're coming from a point of abundance. Everything's good. They are the royals in the countryside during the bubonic plague that don't know that anything's going on. In fact, they're confused why all the people are complaining about life being so hard. I don't get it. My life's great. I just went on a vacation. And my wife was showing me this individual that they come from HVAC royalty, right? So the person that invented the HVAC, they're a descendant of them. They're currently going on a 5-day vacation to celebrate their 40th birthday party, where they invited 25 friends on the most extravagant vacation you could even imagine. They rented out an entire train to go to certain parts of Europe. And they paid for all their friends and all this stuff. And it is insane. Guess what? Does that person think the economy is in a recession? No, they don't even know what that word is. And so this tells me if you know that target, you need to change the way your marketing is. Things that I would do, again, switch that copy to things of abundance, right? Things are amazing right now. How could you take advantage of all the things that no one is talking about? The media says the economy is bad, but guess what? You and I both know with the right positioning, the right things, here's your opportunity to take advantage of more. Or just make your product more luxury. In fact, I would tell you even pricing. If you know you're targeting that demographic, create some inflation in your offer. Double the price. Increase it. Go up 25% more. See if it affects conversions. I would redline that thing all the way to the point the conversions start to dip and see what the price ends up at. You might find that you're in actually a very inelastic price market because things are so good for them. You're at the top earner level. They are not making purchases wondering about where the future of their dollars are coming from. They aren't looking at a budget and being unemployed for 3 months as what used to be a mid-level or high-level executive, which over the pandemic, they thought all their dreams come true. They got a new job in tech. Things were great. And now they're left in a job market where there are thousands of people applying for a single job every single day. And you are lucky to even get maybe a mention or have to go through a slog of 5 separate interviews only to be told no. And I see all the time, I'm applying for hundreds of jobs, months and months and months of still nothing, not a yes, not hearing anything back. That consumer is not looking for larger prices. They are not going to be concerned about lots of things or ways that you might doing it. They're very, very hesitant because the future does not look promising for them, or at least it comes with a certain level of concern that's going to change their buying habits. So those individuals, you're not going to market the same way. You're going to have to lower your price points. You want to give them that softer entry point in. You want to be coming from that recessionary buying trend. They still want to purchase. They're Americans, guys. We can't help but buy. I don't know if there will ever be a time that we won't buy things, right? We're wired for it. It's what we know. But the way we buy and the triggers we buy have to feel good. And I need to feel like I'm winning. I need to feel like you're giving me more than what I am paying for. So I feel good about giving you any additional dollars going forward. So you might have a more shelled up wallet, but boy, it's a wallet that's always willing to explode. So just know who you're targeting. So if it's the high target people, again, switch to abundance marketing, increase your price points, and make things feel premium. And these are even things we've seen in the market. Even some of our products that we see that are doing well, we've brought on recently. Pulsetto is one that I really check out. Fantastic product. Its price points are at $250 and more for a gadget to wear around your neck. That is not the same accessibility level for most people that think we're in a recession. Now, you might be stressed out and want the relief that a Vegas stimulator provides, but you're thinking about that $250 purchase very, very differently versus the people in the top 20%, which also want that stress relief because I want to feel good all the time because I already feel good all the time, right? Like, why not make myself even better? Life's good. Let's make life even better. I am already doing well. Let me optimize to a further level. That $250 is meaningless to me in terms of the dollars I'm putting out, but the benefits that I get from it are cool. Why not, right? Novelty, curiosity. Why not give it a shot? Those are marketing tactics that would work way better for that audience versus if you're in the audience that's a little bit lower and I'd say worse off. So start shifting some of those things. I think even the products that you're selling. One thing I've said before and I'd really look at is products. We mentioned before, like what you see in markets when wealthy people that are doing well and they kind of sense or they're getting advised on potential risk of inflation going up. Well, they're going to invest in a lot of investment opportunities, right? This is kind of, as money floods to them through new taxes, they want to put it in somewhere. And sometimes they already have a pretty good setup. They're willing to be risky. You could be the person that purveys the risky potential high gain product, whether it's starting a business, whether it's a new potential way to buy property, right? Like a tax lien product. And if you're looking for that, please reach out. We have some connections for that. But there's lots of different opportunities through BizOp, through investment, through finance, right? That these people are really, really looking for. Now, it could attract even a broader audience for people that might be concerned and are looking for tuck their money away. You just shift the marketing a little bit for them. But even for abundance, you could have 2 lines of marketing attracting 2 very different consumers and find a lot of that success. But I'd really focus, what are the needs of the hyper wealthy, the 20% people that are shelling it out there? Vacations that are luxury are probably going to do well, but not value oriented. How do I create a better experience? It's more curated. It's even more luxurious, right? These people are still wanting to spend for fun. They're putting out the dollars. That's where you'd start shifting some of those products. And I'd really focus, like I said, financial would be one area I'd really, really put a lot of attention to. BizOp and not the low ticket I need money, which we see doing very well right now. If that's your market, guess what? That is a great market to get conversions. That being said, you're getting people desperate from financial perspective. Is that always the best customer, right? Like, I don't know about you, but selling to people that don't have money is really hard to extract a lot of money from them. At the end of the day, you're limited to, like, let me put this way: the LTV on ramen is probably not as high as you would want it to be. Because at the end of the day, if someone's buying ramen, they're not always in the best spot. We're not buying ramen out of fun and joy, as much as my kids might think that that's what they love about ramen. For the most part, we would like something a little bit better, at least in the United States, and what we think of standard ramen. So just remember who you're targeting. So if I'm targeting a buyer that's really, really desperate for cash, I have to expect a lower LTV. I have to change the way I look and structure my business. What am I going to do with these leads? Am I just going to aggressively remarket? You might have to, but that also means you're going to have to churn through very, very price-sensitive consumers that want to refund and charge back a lot faster. Your value levels are going to have to be very, very high. You might have to shift the way that you do things, or qualify the people that are more committed and quickly get rid of the people that are just kind of desperately not able to buy or to do things with, right? So these are things I'd really be paying attention to and how I construct my offer and what I'm doing with that offer. Again, if you go up to, say, the people of abundance, and I would tell you right now, I think this makes a lot of sense, right? It tends to be older individuals. Demographically, we look at this 20%, they're going to skew older. So these are products that already work well in our direct response world. It does make sense to say, hey, I could probably charge even more or get more premium for what I'm offering. Now, I would say some other things too. Health is really challenging. I'll do a quick compliance thing in there. I don't know if you've noticed. The FTC is doing some things that I think will continue to make health very, very challenging. Whether that's the review of OTC products. Granted, that actually is an opportunity for you if we make more OTC products and certain previously pharmaceutical drugs a lot more accessible. There's generics and ways for you to sell that to individual consumers through private pay that open up a whole new market for you, right? And if with the right marketing and making a premium generic style over-the-counter drug that targets high consumers, the top 20%, you yourself might find yourself in a really, really advantageous position through this type of regulation. But that also means that you're going to get flooded with drugs into a market previously has been trying to compete with supplements. And that's a challenge because sometimes those results are just a lot better. There's also the advent of telemedicine. We know that's huge. And there's actually, if you look at what the FTC and FTC and FDA have been focused on, they released what their main focus is on. Healthcare and telemedicine is a huge emphasis for them. So that means you're going to see a lot of regulation, but also means that's because it's such a big market. And that market is really eating up a lot of what we've seen in health and fitness. So maybe that's not the focus for those, or we start shifting to that 20% and what are the things that they actually need. The broader audiences might be being attacked with things that are hard to compete against. If all of a sudden Johnson & Johnson's putting all their dollars behind pushing out OTCs that have now become way more prevalent, and previously people didn't want to go to a doctor or they thought that this was bad or so on and so forth, and now they just changed their marketing, you're just in another really tough place and you're competing in a really, really now even more challenging arena in this health realm for what I would say might be that 60% or the larger percent of people that aren't as optimistic or suffering in the market. So again, you just have to shift and look at those things, right? Look at financials or other things to look at you, whether it's business opportunity, it might be dating, right? It's just whatever's going to fit into those realms. I'd really focus on the top 20%, start breaking down what that demographic is and kind of look at how the broader markets are shifting and change what that might be. I think a big one too might be tactical stuff. These people are now at a period where their hobbies and their luxuries are very accessible to them. And we all know that all hobbies really are is a way for us to throw money away that we should probably invest and do something different with, right? Whether it's golf, whether it's for me right now, coffee, which continually just is, I look at and think I am not making or saving any money here. I'm just continuing to spend more and more on these ridiculous tools or gadgets or a new machine. And next thing you know, I'm going to be $10,000 in deep just for a coffee machine because I need that perfect drip to be able to have every single morning. But these are things where those markets with the proper marketing could become incredibly high margin. And that's a place to ride, especially through instability, because we've already seen in these markets, they're investing the right way. Most likely, if things go awry, they're still going to feel it last, which means your business is going to be less affected. Your market is still going to be driving you money. And maybe you shrink in terms of your acquisition, but your net profits are going to ride through and create a brand that even if you then open that up as the market changes and shifts, because we know the economy is cyclical, it's not going to be bad forever. And even though there might be people on Reddit that tell you that it will and the lizard people want us all to die, I would really bet against that. I don't think that's likely to happen. But during this time frame of instability, if you were going to the most stable markets, they're spending the most money, and you find a unique position there, listen, we could all do what Louis Vuitton did, what the major brands did. It's Chanel and all this stuff. They kind of call it like the target buyer, right? How do I make this brand that everybody wants still have an accessible version that in reality is still well marked up, but they could buy it and stretch for that, right? That is a model where you could take premium and then bring it to the masses and create mass distribution. But right now might be the time for you to focus on premium when a lot of other people might already be like, listen, to go into the other markets, you might have to be too aggressive, right? The margins might be too slim, and it's still very competitive with a very, very unconfident buyer. They don't really feel like things are going well. So that's just some things I would start shifting and thinking about. In terms of those demographics or where to find this stuff, I would tell you the news is really, really challenging. It's really, really hard to get this data from the news, just because you're going to get snippets. You're going to get things that I know. Listen, guys, I don't want to say bias or fake news. That's just tired. But in general, everything does have like economic data is very, very gray. And I think at the end of the day, the only truth that we know about economics is we don't really know that much about economics. The world and economy tends to move in an invisible way because it's a mix of perception and reality. And it's tough to predict at the same time. And through that gray interpretation, you're going to get especially certain leans and certain motivations that sometimes can be really hard to tell the truth. I like to get to some like core raw data like reporting on economics, on labor reports. I wish I could remember the exact name, but if you just go to if you're seeing somebody reference something, go to their source citation. There's great places where you could even look at your own charts, chart things out, look at trends and behavioral trends, break down. When you look at GDP, don't just look at the GDP number, break down the individual tranches that make that up. Now, I do think this is a great use of things like Gemini too. If you just want to get curious and get raw data, you could ask for raw data and it will be able to pull that unbiased of anything else and get to the actual numbers in a way that you could read it, consume it, and understand it. These are the things that I would do spending that time. Ask those questions. Be curious. Just think, is this true? That's even a great thing to ask. Like, hey, I'm hearing this. Can you explain this to me in the most unbiased way and give me the other position and then give me the raw data to tell me the truth in between? Don't ask for it to give you opinion. Just ask for it to give you data. And then from there, it's up to you to make the decisions. You have to find this out. And if you're like, I don't know, I don't read any of this stuff, that's fine. Find somebody who does. Have a conversation with them. Listen to our podcast. That's a great source of information. And I would tell you, go listen to a podcast you completely disagree with, talk about the economy, and one that you do agree with, talk about the economy. See the different sides and start to make the patterns and the consistent things that you could read through the middle. And you'll find that all of a sudden you feel you're becoming a bit of a Nostradamus. You seem like you know more than other people around you do, and you find yourself predicting the future. I think that's the pathway, and that's where I want you guys to sit and think about this. Because I circle this back and what this means to your business, what this means to marketing. At the end of the day, marketers, we don't necessarily always speak the language of truth, but we do speak the language of desire, right? And the key to the best marketing is being able to connect desire I didn't know I have until I met you. And so that requires a certain level of predicting things that people don't see and talking to that before it becomes apparent. Because as soon as everyone's aware of the game, it's a lot harder to make sure that they're going to be convinced of it. So as marketers, it behooves us to really study the underlying nature of whether it's the economy, but most importantly, what that means to human behavior. Because if we could understand what it means to human behavior, we could talk to that, and it increases our ability to be very successful. On top of that, if you could start predicting where things are going, you're much more likely to be prepared when things go wrong. So you're already in a better position where everyone else in the market might be. And that is what I really want you guys to make sure that you understand, whether you're just starting out or you've been doing this for a long, long time. Everyone is on equal playing field of understanding the future and where that opportunity could lie. Depending on what your strengths are and what you think you could do, that's all up to you, right? But at least you're putting your best foot forward to make sure you're in the best position to succeed. So with that, I would say, please, guys, rate, review, subscribe, ask us some questions, make sure that you're always engaging with us. And we'd love to hear your feedback on this episode. Be sure to talk about it. We've never done something like this before. We don't know if we'll do anything like this in the future, but I'm just really curious what your guys' thoughts are. Please yell at me if you disagree. That would be great. I'd love to not respond, but I will definitely laugh at them later. But if you challenge and someone has a great idea, I love that too. There's nothing wrong with being wrong, and there's nothing wrong with at least people thinking you're wrong. Regardless, you have an opinion, you have a thought, and if there's thought process behind it, that's all that matters. So share those thought processes or even your dumb opinions. We like them all in equal measure. And until next time, I guess we'd say if Thomas is here, you'd say happy scaling, but I just want to say thank you for listening and have a great one.